Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 25th of January, 2021. Believe it or not, last Monday of January already. The month has absolutely and completely flown by. Today is episode number 1923. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, hopping on over to the pre-market summary sheet, we have a market that is basically unchanged on Friday's S&P close, but really it's a mild risk off sentiment today. It has come back. The S&P has basically come back and is trading inside of the prior day's range after pushing almost to the all-time RTH highs. So selling since the European Open, risk off, and you can see the Euro Stocks 50, which represents the Eurozone, 50 major stocks in the Eurozone, and the German DAX are off quite a bit this morning. Crude oil is off as well. Gold is higher, silver's higher, and the 10 years, the 30 years in the U.S. are higher, and so is the Bund. Again, clearly risk off. The key drivers this morning in terms of what's impacting the market, there's a push by the Biden administration that the stimulus cannot wait, and they want to push a $1.9 trillion COVID-19 relief package. I'm hearing this morning that Republican senators are balking at the amount, and there may be some resistance building up to it. So we'll see how this plays out. But, politics in play here. Fed set to look beyond possible post-pandemic inflation shock. And that's really it. We do have earnings continuing. The S&P and NASDAQ futures rose as markets geared up for a busy week of earnings from mega-cap technology companies against the backdrop of rising hopes for a fiscal package from the Biden administration. European stocks were mixed, and so on and so forth. So I won't dwell on this too much today. We have the Dallas Fed manufacturing at 10:30, ECB's Lagarde at 11 Eastern. Let me double check that. Yeah, 11 Eastern, and that's and then the policy meeting minutes out of the Bank of Japan at 5:50 p.m. This is what we've got going on. There's a clear divergence between the NASDAQ, the mega cap tech stocks, and the rest of the market. Seeing the Russell basically trading all the way down, the trading lower this morning. So is the Dow. But the Nasdaq still holding a flag near all-time highs, and it just looks quite divergent. Here's what we expected on Friday. Yeah, option call sellers are getting crushed right now in the equity options. Friday, I was looking for a push to 35-ish, 35.50, and then for it to drop below the prior day's range and make its way down into 04 double O's, or the century figure, before bouncing. I was looking for a gap zone fill on Friday. Did not happen at all. The secondary is a pullback down. Remember, we're opening in a gap down, was looking for a pullback for initiative selling, and then responsive into 35.50 and hold steady in that area at the prior day's range. Neither of these played out so cleanly on Friday. We did get an immediate push into 37 and a quarter. Remember, I was looking for 35.50, which was right here, this stock zone right here, and it started to turn over. And it looked a whole lot like scenario one, and I was looking for the continuation down. So There's the pullback, 35.50, went to 37 and a quarter. And then we get this bona fide impulse down, which I marked with an arrow like this. And the expectation is pullback, usually to mid, VWAP, that sort of thing, and then continuation. And I was looking for it to make its way down towards 38.09, 04, and the century figure. No such luck. We did have the impulse. We did have the pullback. We had a rotation down of about 7 points right here to extend the IB low down. So we have range extension down, and then we put in a higher low, and then we start to break above. Hold the mid from above. So we hold the mid from below, hold the mid and VWAP from above, and then we have an impulsive move higher, a second impulsive move higher to push to neutral into 42.50. So now the S&P is back into Thursday's range. If you recall, Thursday we had a bona fide, again by the word bona fide, double or triple top here, weak high. This high is quite weak from Thursday at the 53.75. I expect it to be taken out. That is the RTH all-time high. On Friday, we get back into the range, and where do we go? We go right to the point of control, the volume point of control right here at 45 and a quarter, which is also the close. We tag 45 and fall right back off to close neutral normal on Friday, right inside of the IB, on top of the VWAP mid and the point of control. So Friday had a lower close than Thursday. We haven't had a lower close in a while. We had a lower close versus Thursday, showing weakness. We did open in a gap down, and we did test the point of control that held. We took that out in the overnight session, but overall, the delta was relatively strong on Friday. We had some pretty good delta numbers. There was quite a bit of lifting effort by buyers, but they gave it back up, and we ended up closing right in the 38, 33 area. So overall, Friday, a valiant push. There was a bit of a head fake. We did end up with a neutral normal day, and that tells us the market is basically in disagreement. The buyers and sellers are pushing in both directions. The market is really fighting in terms of which way it wants to go. Take that and move it forward to what we've got today. So we've got this all-time high in the extended hours at 59.75, and we have this weak RTH high at 53.75. And then last night, where do we go for our overnight high? We go to 53 and a quarter. So we miss that all-time high, the RTH all-time high in triple top by 2 ticks. Before sellers step in right at the European Open and just extend the moves down. This is a 30-minute chart. Pretty good volume during this session. The overall inventory, if we go back to the summary sheet, the overall inventory right here is almost 100% long, but we are back at Friday's close. So what this is saying basically is it did a lot of exploring above and has failed to hold these prices to open there. We're making a pushback with 41, 42 as immediate resistance right now in the S&Ps. But the overall profile is a kind of a multi-distribution price discovery type profile. I know it's listed as balanced, but really, if you look at the distribution of this morning, we have a very thin and multi. Well, this looks like a profile again. Someone's Frankenstein's profile. This looks like a multi-distribution profile. And so what this is saying to us is that with the volume being as high as it is, and with the discovery process being as active as it is, there's a fight going both ways. We expect that to carry into today's session. So I'm expecting the open to be, even though it's a Monday, I'm expecting the open to be relatively active. So we have pushed back. We have pushed down into the 2830 stock zone on the dot. 2830 right there, that's the stock zone. And we are bouncing back towards the VWAP and mid of the session. Recall that Friday's high is 45 with the MC point of control at 45 and a quarter. So there's some relatively steady resist. There's some decent resistance up here. Again, 45 and 42. And once it clears this area, then the all-time high becomes the next vulnerable test, the RTH all-time high, and then the full session all-time high beyond there. Okay, I expect it to really struggle once it gets up here today. Why is this not working? Not sure. So that's what we've got. The selling, the selling started right in here, and you can see that the delta has been selling off, but not incredibly aggressive until just a couple of hours ago. It's really not. It hasn't been all that active on the sell side until about a couple of hours ago, and it's we are right back inside of the prior day's range. So I'm not seeing too much other than the fact that the market overall is in balance right now, and we're holding steady where we are. One thing I want to go over is the daily. Very important to check this out. So this is what we accomplished last week. Last week was a 4-day week. We pushed higher. We had a higher low, higher high on the weekly. We pushed the point of control up higher. This is the point of control that's at 45 and a quarter. This is the one that we seem to be heading toward. And overall, the structure has not changed. The context and structure has not changed for buyers at all. We had an inside week 2 weeks ago, and we broke to the upside to new all-time highs. We still have a gap beneath us right here. This is the gap that I expected to see filled on Friday. And we've attempted a pullback, and now we are trading inside of Friday's range. So pay attention today to Friday's low. Very important to see how it behaves once it gets to Friday's low. Friday's low is likely to, if it breaches, it is likely to get through the 3,800 and back to 37.95. Same story, different day. As I told you guys, this isn't my favorite kind of market where we're grinding and pushing through highs consistently, and it is what it is. So that's where we stand. In terms of what's expected for today, let's go into our plan for today. Just going to set up the chart real quick here. Wow, my keyboard's not operating properly. Okay. Looks like this PC needs a reset. Okay, so primary scenario. Given what we've done, the primary scenario for today, remember inventory is 100% long. The expectation is this is likely to continue to chop its way back up. I'm looking for it to push into the 42, confront some resistance, potentially turn. If not, go up to 45 and potentially turn. In either case, I'm looking for it to turn around, consolidate. I'm looking for an impulse down of some sort, consolidate, and come back into the 30 again The point of control Friday, bring us back into balance. Test this 30, this break this overnight low, and move through Friday's profile before balancing out and finishing basically in the same spot. We're seeing several indications that the longs are getting weaker as we push higher. The other than Friday, the delta participation hasn't been all that aggressive. The pushes higher tend to falter and weaken as prices move through the 38.50 mid-century figure. So I'm looking for that extension down. We have a ways to go to get to that gap, but don't be surprised if we do get there very quickly. Any news out of this stimulus or whatever is likely to be a catalyst for that. The secondary scenario is an immediate push lower, balancing the overnight inventory, consolidate, and then start to grind its way through that 42, 45, consolidate at the 45, and then start to squeeze towards the overnight high and the all-time high up above. And that may push through, but I'm not expecting it to run away very far. I know these are two opposing scenarios, but the overall play is, does it hold the 30, but more importantly, does it hold this 22 from Friday? The 22 from Friday is really important down here. If it holds this 22 from Friday, then it's either going to chop in the middle or more likely have scenario 2 where it pushes higher. So if we're not able to squeeze down into the 22 and breach that low, breach this low and continue to build this one-time framing down, then it is likely to continue higher to follow the bigger trend. And so that's what we're looking at as we stand here. The 22, if not the 45, these are the key areas to watch for today's session. Okay, we're opening in range, in value of Friday, but there's been a fair amount of activity overnight, so I'm expecting that to continue. But we are opening in balance in that we are back in Friday's range. Okay, so I'll leave you with those thoughts. Hopefully you picked something up today. Good luck, and watch your risk as you trade. Take care.